What a difference between a retracement and deviation, and why we use it, why we even calculating this. First thing is to understand why we even using it. And anybody else has the answer, you guys can drop it in the chat also. Anybody else? Any educated guess? So what is the difference between a deviation versus a retracement when it comes to fibs? And like, what is the context of it? Like, why are we using it? Or at least, why am I using it? Or if you're using it, why are you using it? Or if you're wanting to learn how to use it, why do you think we're using it? Is the question. So everybody should have some sort of answer if you guys are in here listening. Because either you're using it already, or you're wanting to learn how to use it, or one or the other, right? So everybody should have some sort of answer. Okay, that's a one simple answer, yes, from Bovin, but that's something a little different for as it's the same thing, but it's a little different for as when we measure fibs versus just premium discount. It's not just so these are the things that I want to make sure people avoid. It's not just the level where it comes that you just take a buy or sell. Also, I just turned my stream on too, so you guys can watch. So deviation, guys, why I use deviation, right, is to calculate and measure how far did the price move away from the value. Okay, how far did the price disconnect from the value, right? And by understanding how far price has disconnected from the value, so clean example, I'll show you guys here, right? You guys can see here from this low to that high, price has deviated outside of value, right? This is the value, correct? From last week, you guys should all remember what value is, right? So from the value, you guys can see clearly there's a value here, right? That we're trading inside of. But what does price do? It deviates outside of the value, right? So this is where we can understand, oh shit, price has now disconnected. It's not connected inside of the value, right? We're not staying in the value, right? So again, it's disconnecting from the value. And again, once we find price disconnecting from value plus it's absorbing and volume is fading out, we can understand that that is the deviation outside of value. So we can grab the high to the low of this deviation, right? And then we can now measure one deviation away. Okay, so again, what is one deviation? That is just the same amount of distance from here to here. You guys see that? So it's just math. This is not just now a magical number. It's just a calculated deviation, right? One standard deviation away from the disconnection of the value. Does that make sense, guys? If that's a little bit confusing, let me know right now so I can clarify for you guys. This may sound confusing. Right? But again, it's first to understand what we're doing, what the context is. Price is disconnecting outside of value, right? And we can now understand from that disconnection of value where price could potentially deviate back down to the value, into the value, outside of the value, right? Where now you guys can see you have your -1, -1.5, and -2, -2.25, -2.5, and -3, and then -4 is your extreme liquidation. So if it any time reaches -4 and there's a huge reaction and absorption, that is like the best time to look for mega reversals, right? Clearest sign that you could have is to hit -4, extreme deviation. That means we have deviated 4 times, okay? 4 times away from the value. You guys see this? Exactly 4 times away from the disconnection of the value. Does that make sense? So these numbers are not just random numbers that you're seeing now. You're understanding that's the deviation of this disconnection of the value, right? That's the 1 deviation away from the value. That's 2 deviation away from the value. But again, now our job is to line up which level has the most relevant level of value. You guys can see here, there's value here, value here, value here, right? So now we can trim it down. Okay, the best target for this move, even from this point, before we even hit this level, is to target 2 to -2.5 to -2.5 here, or -2.25 to -5, since it is lining with previous value now. And that is the deviation that we have calculated from previous value that we just left. So we can now line the value to the deviation of the value for our targets. And you guys can see we hit this target, and what do? We react off of it, right? We're absorbing that level plus the value, right? So now from this point, what do we get again, guys? So now from that point, it's repeating cycle now. Now, what can we notice again? Where has the price last deviated outside of value here? Can anybody give me an answer here? Or to the value. It doesn't quite literally have to deviate, but in this case, right, we're right at the value, right? At the extreme of the value. We did not deviate, but that's the max value, right? So from this point, what can we understand? These are the liquidations, right? From this value. So again, from this deviation point that we just bounced off from, we can now pull a new deviation from the other direction now, right? Calculating from this value low to this liquidation high, right? Then again, where are we reaching again? Again, we're reaching previous value that lines with 2 to 2.5 to 2.5, right? I don't know why I keep saying 2.5 2 times, but 2 and 2.25 and 2.5, correct? Again, exactly precisely. But again, those 2 levels line with the value, right? Previous value. We're not just randomly using these levels. It has to line with value. Does that make sense, guys? I'll let you guys ask questions now. Yeah, I'll show how to draw and stuff, but I just want to hear if you guys have any question on understanding what you're supposed to be doing. Like, does the idea make sense? Why I'm using those deviations with the volume profile. Not just the deviation itself, right? Not just the deviation. Not random liquidation. right? It has to be according to the value. And I can show you guys more examples, right? Again, from this point, guys, what can you notice? Time and value, right? You have, again, third 6, third 90, time, and value. And what happens right on that time and value? Again, you have a liquidation deviating outside of the value, right? Right there. You guys see that? So again, the best way to start to get used to drawing these is to now mark out your liquidation candles. Okay, this is the liquidation candles that we disconnected outside of the value on time, right? So now, from that point, you can understand, okay, we can now start to calculate this low to that high, right? Then again, you will see your -1 is right here, and your -1.5 is right here, and your -2 is right here, and then 2.5 is right here. And again, where do we end up coming to stop, guys? Exactly to the tick to the -2.5. And that you could have projected that with this understanding of value and deviation at the same time. It's already projected prices. So this is what's going to help you guys hold your trades longer, right? To a proper level, at least to a -1.5, right? Or -1. People be TPing here. They enter here, they get scared here, and then they TP. We haven't even first gone into the value, to the other side of the value, right? And second, we haven't even deviated outside of the value. Right? Minimum is to get to the value. That's why I always teach you guys trade value to value. Just even value to value, you can profit heavy. But again, now what this is going to do to get you extra profits, extra, it's going to help you guys hold your trades longer to the right places that lines with the proper value and the deviation of the value itself. Not just random values or not just random liquidation that you're pulling the deviation from, which that's how, regular way is taught, right? Of to use deviation. You just grab whatever liquidation candle and, whatever sweeps the high, you grab that. But again, that's not what we're doing with this. It has to line with the value, right? And also you can do this on the higher time frame when it deviates outside of the higher time frame value, which I'll show you guys in a second after this. So everybody understands what value is and everybody gets why we're pulling the deviation from the value and how that is helping us. And then, so you guys can now slowly start to see and understand why we're reaching for these values now, right? We left today's value, right? We're outside of today's value. We're spending time outside of today's value, right? So now, obvious answer is to reach for the previous value, right? Which is right here, plus the deviation levels. Right? So value and deviation lines once again. So again, if we do not clear this high, right? If we swing fail here, what do you think it's going to happen, guys? Most likely, if we fail here. Think about it, guys. This is the next step. If we fail here now, what do you need to be doing? If we absorb here and wick down, what are you guys doing here now? And again, that's the TP for the longs, right? And again, if we fail there, then that's the entry for the short. Cook it up. And again, we have what? If we fail here, that means we also now deviated outside of value, right? So currently, we're deviating outside of value. So you guys should all know that right now. Current price is deviated outside of today's value. And again, if we fail off of this projection, then what can we do? The opposing direction, guys. Again, pull the high. If that's the leg, high to this low, right? That has deviated outside of the value. Then again, what do we get? A calculation. Again, or -2 to 2.5 is where? Where does it line with? Previous value. Wow. So it's all value to value to value to value. All standard deviation is showing you is how you could potentially reach that level. And now your job is to understand the reactions off of those levels, or gapping through it. Now think about it, guys. If we're gapping through this level, then what will happen? You will genuinely know that we're coming to the last value, right? It's not a question. It's not a guess. It all lines together perfectly mathematically. You guys can see that. How the value is lining with the previous value's deviation. Like what? Right? So I'm not just lining it with random gaps or things like that, or order block or whatever. Right? I'm lining it with value, value, value. And it has to start from value when you're pulling it. Does that make sense, guys? So it all tells you something. And again, like I said, -4 equals what? Extreme liquidation. If we just say somehow we came here, boom, and we soaked up, then that will be the mega long. At least, again, from the deviation, then we can pull again, right? From whatever value that we have disconnected here, then we can already format how can we go back up, right? And again, if you see that, then again, we will line with previous value coming back up, right? And that's how you trade value to value, value to value, value to value, while price rotates through the values, creating imbalance, imbalance, and then goes rebalance, and then imbalance, and then again balance, and then rebalances, and then continue to make that cycle while we create value, right? While we create value. So don't blindly just pull any liquidation and start, you know what I'm saying? So the easiest way to spot these value disconnect is to use the volume profile. If not, you're just going to be pulling it random. Now you're just going to pull random licks, right? This is what I'm talking about. Because people don't understand value. This is what I mean. People will look at any liquidation. Oh, that's a lick. Pulled it. Get stopped out. You see what I'm saying? But again, that if you look at value here, the value disconnect was right here. So you would not pull it from here if you understood that, right? You would pull it from here to here, and then you'll be like, oh, okay, we can take it back up and lines perfectly. Boom, 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 boom. So now you can't just pull it everywhere and anywhere, because that's how people get, it fails. And higher probability to fail when you're calculating those deviation without using value. Without using value. Then you can pull it anywhere now, right? This is what I'm talking about, guys. You'll see anything and everything, and you'll be like, oh, yeah, I got to pull the deviation here, and then let me calculate how far we can go, and then boom, stop that. And then they'll be like, oh, this shit doesn't work. But again, they don't have the right context. And most people, that's the case, right? And that's why you guys are all here to make a change and not be those part of those people. I'm telling you guys things that you guys will not hear online, quite literally. So really sit here and think about it. You will not find single person say this on YouTube. You will not find single person, you know what I'm trying to say? Like, after today, guys, go watch standard deviation video on YouTube and see anybody says anything close to what I say. There will be thousands of videos. Nobody will understand to use value with the deviation. I guarantee it. And they're just going to say it's a magical level that it reverses off of. I swear to God, that's how they teach it. But again, I'm showing you guys the reality of it. What you're actually calculating. It's not random. I'm not just telling you guys, oh, that's the lick, and you pull it here and you just target there and you trade off of there. I'm showing you guys the full function of it and why we're doing it, right? I'm not just telling you guys, okay, this is the level, and then you just trade when it goes there. I'm showing you guys the full mechanic of it. Now, what's a retracement now, guys? So now we understand, right? We all understand what this deviation is doing, right? So now, who can tell me Who can tell me why we're using the fibs and how to use them properly? And now we're going to talk about the retracements. And hold on, before we go to the retracement, if anybody needs to get the setting on this, on the deviation, this is the setting. Right, and then just yeah, I don't know if this is going to capture this, but yeah, I think it will. I'm smarter than you, 8-6. Oh, see, I knew that was coming. I knew those were coming. So I just, yeah, but it doesn't matter. Yours, I can barely even see, bro. I have to like squint in there and see it. Like I got it nice and clean for you guys. Just the thing itself. You have the whole screen and everything, and you know what I'm saying? Yeah, come on, bro. You gotta give me that one. You gotta give me that one. All right, this time. All right, I lose this time. You lose this time. I'll let you in next time. But either way, that's the setting for the deviations, okay, guys? And then now we're gonna talk about retracements, okay? So now retracements is gonna be completely different. This is the setting for the retracement. So this is very basic fib. So this is nothing special, right? This is your ordinary fib levels that's been taught for fucking 2 billion thousand years. Okay, so these are your standard fib levels, not fucking smart money fib levels and this like that. It's just regular fib levels from Elliott wave and fucking harmonic patterns or whatever. Just regular fib levels. Okay. So these are nothing special levels or not versus like, these deviation levels, right? These are a little different. These are not traditional fib levels, right? Or nor these are not your traditional extension levels. I don't like to use extension. So I'm not going to teach you guys that, but it's very similar, but it's different way. It's a very different way of calculating. It's more for calculating structure rather than the value and the deviation. So all these little things, they all have a different purpose, guys. So you got to find, what you're looking for, right? But what I'm looking for is to calculate the value, right? And what structure or Elliott wave traders will look for is to calculate and measure the move of those impulse and moves up, right? So they're calculating structures and price. I'm calculating value and deviation. Again, both using fibs. This is where most people will get confused, right? Oh, well, they're both fibs. They're both same levels, similar levels. But again, it's the whole context is different. Does that make sense, guys? And it's not wrong to measure structure and price. I just like to measure value because that's how I trade, right? I trade with value and time. So my focus is to, calculate those things, right? But now coming back, this is where retracement, this is what I'm saying. We're measuring now, retracement is now you're measuring the retracement from the value to values, right? So now it goes hand to hand, okay? This is where it goes hand to hand, okay? Watch this, okay? So now we have this high, right? Previous value, that's the high, right? And then again, previous value, that's the low, right? So we have the low and the high, value to value, right? Value to value. Again, where are we inside of this value? Right inside of the GP, right? So this is where you guys want to pay attention, okay? So I'm going to just kind of make it simpler so it's not everywhere. So I'm going to do this, right? We're inside of the GP. And then now, again, we're going to calculate the deviation from here, like how we did. And then we're going to calculate the deviation up, how we did. And you will see those deviation now with this value lines perfectly with this GP. So it's all calculated, boom, 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 that level. If we fail, that's high probability. If we blast, then it's going to blast the high now. Because all your major levels sitting here now, right? Your gaps here, your values here, your deviation levels here, and your fib levels here, right? So if we actually blast here, then that's how we're going to get the Monday range, Tuesday, Wednesday, and then boom, smack right back down. Again, whatever the deviation, we can calculate to get our targets to the previous values. Before it all happens, we can understand that is what I'm saying, guys. So you don't have to be 2-step late every single time you're looking at the chart. You can be 2-step ahead. You can have these type of expectation, understanding how we rotate through value. Does that make sense, guys? And again, using session profile and pulling fibs are the two easiest things that you guys can learn how to do if you're a beginner at least. It's not reading ordered flow on the complex chart, reading numbers and things like that. It's just measuring the information that you know how to read. All right, that's very easy for beginners. You just need to understand, okay, this is disconnected out of value. Oh, okay, this is the value to value retracement. Oh, this is the previous value. Oh, we have value here. Oh, we have value there. Oh, this is the higher time frame value here. Like those are the contexts that you guys all need to have and understand. Does that make sense? And like I said, I showed you guys on the weekly update video I made, right? If you guys go watch it, I told you guys if we scam up again with the Monday range, then most likely we're going to take out the high with the Tuesday, Wednesday again. And then if we sweep the high again, then say goodbye. Again, that's the value area high on the higher time frame. So now this is where I'm telling you guys, okay, we can now do the same thing on the higher time frame. Okay, now we'll get rid of all these time on the smaller time frame so we can make the chart clean, right? And then now we can zoom out, go to the higher time. Okay, you have this massive Monday range now with the Sunday close. Again, this is not a good sign. We're starting Monday high, right? So if we don't gap the next two candles, meaning the Monday has to close and then Tuesday candle has to come out, push up, right? And Wednesday candle has to come out, open low and push up to make a gap. If it doesn't do that, then there's no way we're going to just take out all these highs and start going high. Right? And then you guys can see we have the previous low here plus the gap. Right? And then that's not even using any value. That's just using structural price, right? But then now if we add the higher time frame value, which is here to here, once again, we're hanging right at the value area high, just again, just like last time. Week 3, Monday, Tuesday, Wednesday. Again, we're at week 3, guys. Again, we're doing Monday, Tuesday, Wednesday, question mark? Then we're going right back down again. Again. Right? It's not looking so hefty here. Like for me, like for people, maybe this looks bullish, but for me, it looks more sus than bullish. And this is my reasoning. Right? It was the same way on week 3. I was the one that I was telling you guys to short the fuck out of it. Everybody was bullish here again. And time and value was telling me it's not bullish. Right? Monthly fractal week 3 plus value high, open high Monday, Tuesday. So you're having a monthly fractal plus this is exactly what we're about to do this Wednesday, guys. That's every fractal lining up, every third fractal, right? Monthly fractal lining. Week 3, that's third fractal, right? Wednesday, what is that? That's your weekly third fractal, right? And then on the third 6, on the third 90, what is that? That's your third fractal of the day. So again, that's every third fractal happening right there. And that's why you see this explosive move. Right? It's all timed perfectly. And again, it's timing up perfectly again. It's doing the Monday range, Tuesday, Wednesday. If we sweep the high and fail again, then that's the mega short. And whatever that deviation is, like I'm telling you guys now, we can understand what has disconnected from the value, right? Higher time frame value. So we will now be able to understand whatever that liquidation is, pull it to what has deviated, and we'll get our target. And you guys can see. If we fail here in licks, then our target becomes like this. At least, again, to take out the quarter 1 low where my alert is, like I've been telling you guys. And you guys can see the -1 lines perfectly with my second alert. So these are all calculated levels. If we do lick this high, then again, it's all destined to take out these lows if we fail it. The only way that we will push higher is now actually to gap like that. That's the only way that we can displace higher. If we fail here and then just sweep here and wick here again, and then, oh, that's most likely what it's looking like we're about to do though. Right? We're able to Monday, Tuesday, Wednesday, week 3. It's all lining up. Same thing again. So it's looking very sketchy here at this moment for me at least. Right? And that's why I'm being very cautious here. Right? But again, it's a good Monday range like every Monday. Every Monday we've been doing the crazy Monday range. So it's the same behavior each week. We're still inside of this higher time frame value, which again, we cannot make anything out of it until we fully displace, not just disconnect, right? We keep, look at this, guys. We keep disconnecting out of value, right? We keep disconnecting out of value. We keep disconnecting out of value, but it comes right back inside of the value. Comes right back inside of the value. So we have to show quite literally a different behavior this time if this is real. So there's no guesswork to this, guys. Whether bottom is in, top is in, people guess. There are no guess to this. If you guys know how to read what I'm showing you guys, you can know. Oh, if we do not show the different behavior, then that's not the bottom. We still have a low to put in, and that will be the low, and then we can look for mega plays, right? But if we show a different behavior, quite literally, boom, displace higher, not disconnect, but displace, gap higher with strength and momentum, right? Then it's a whole different story now. Then we're fully out of this value. Then we can be like, okay, this is your disconnection out of the value. And you can see, you can have all these target, right? And then again, this is your quarter one high. So that's your first target, like I said, right? And then again, you can use -1 as, little TPP for the first target, right? Because even here to here, that's mega target. That's a big ass move. You guys see what I'm trying to say now? So it's all calculated already. If this is the bottom, then you guys can see the projection is already all back up to the previous value, which is again up here, which lines again with here. So again, if this is the bottom, then we're most definitely coming here before we come back down to do some bullshit, right? Minimum taking out the quarter one high. And then we can come all the way back down in quarter 3 to a fat ass 1-2 before ripping in quarter 4, which most likely looking like the case to me, right? If this is the low, but I don't know, right? We have to see that evidence. We're not seeing that evidence. We could just literally sweep it again. And that's what we want to wait for Wednesday and see it for ourselves. We don't have to guess it. This is a lot of people, they will guess it now. We can plan it out, but again, it has to come to Wednesday, and then Wednesday has to show us, are we absorbing that high or not? And by then, we will know, right? We will quite literally physically know by looking at the candlestick at that time. Are we failing the high or no by Wednesday? And if we are, then we know to bring it back into the value to take out all those lows, right? That we have accumulated throughout multiple months now. And that's a perfect trendline liquidity. I don't know if you guys can see, but right, it's literally quite literally just a perfect trendline liquidity. So if it does fail high, this is now going to be a massive bull trap. And then it's going to go meow, and then take this, and then it's going to blast all these highs. Right? Which is, again, the most, this will be the most ideal scenario. Ideal scenario. At least for me. I don't know about you guys, but this will be the most ideal. But this is, again, my bias, so I can't stick to this. Right? This is just my bias. So I have to follow what market gives, understanding the value and time. Right? And go with the whatever scenarios that it's giving that I just have described to you guys. Does that make sense? Any questions? Exactly. You have to use it with the context of value, not just the context of price. Anything, like I said, you guys can apply, as long as time and value lines. It could be fib, it could be fucking harmonic pattern, it could be, you know what I'm saying, support and resistance, whatever it might be the case, right? But for me, Thomas, I've used fibs for how long, bro? That's one tool that I'll never put down because that's one thing it always worked for me. There's no reason to, fix what's not broken. It's just it's just enhanced understanding, more clear context, right? If you're just again, like I said, clear difference of regularly using fib is just swing high, swing lows. Any again, regular way to use deviations or just calculate any liquidations. Right? Whatever one it is. The same goes for again, regularly trading fibs. You pull swing high to swing low. Isn't that what they not teach you? So it's now, completely different understanding because it's within the value, not just any move, right? Value to value. Those are the moves that you want to catch the retracement, right? As long as the context is proper. And same thing with any moves inside of you, right? If we now grab the low and grab the high here, right? And then grab the fib, right? You can see the GP here. You can see the GP clearly every time we hit GP in this level, we're just blasting, right? And then again, if you line the value now, where's the value in the POC at? Right? With the GP, no? So tell me it doesn't go hand to hand understanding value and fibs at the same time. Right? It's higher probability it's giving, right? Quite literally. Because now that GP is not just the GP, but it has the most volume in this whole range. How is that not higher probability in any way impossible scenario? Think about it. Just sit there and think about it. That's what I'm saying, bro. Peter knows, bro. How long we've been trading fibs, Peter? I don't know. Since I was out the womb, I think I was trading the fibs. If anything, that understanding value is more newer to me than fibs. Fibs, I'm just, bro. That's like, I pull that shit in my sleep. For real. Like I don't even have to pull the fib, guys. I know where the GP is. I have the auto fib in my eyes. Peter does too. If you trade the fib for so long, you know where the GP is. You don't even have to pull it. And that's why most of the times you guys just don't see it in my chart. But sometimes you'll see it in my chart. Because I want to give you guys a visual reference. I know where the GP is all the time. I just hope you guys know that. I know where it is. It's just messy having fibs on all the time. That's why for me, that's why I just try to clean my chart up most I can. I don't like having 10 things on my chart when I share it. Right? But just know fibs are the most basic and important thing that you can use to increase your probability long as you fully understand it. And I'll give you guys more lessons next time on fibs. Okay, I can give you guys way more lessons. There's more to it, right? Next lesson we can go over, like exact levels, how to use and how to see what kind of reaction and things like that, especially with the deviation. Because fib level is just, you just need to watch the GP, honestly. And then for real shallow pullbacks, you watch the 382. That's the basic rule. You know what I'm saying? For a small correction, strong trend, small correction, you watch the 382. If it bounces off of 382, that's the continuation long. Pretty much like right now. Exactly what I'm saying. Let me just get rid of this value so you can see the fibs. Right? And get rid of this box. But again, we're displacing, and again, what are we bouncing off of? We're blasting through the 382, right? Again, that's why we're seeing this continuation. Plus, we're above the 382 with the Monday range. Right? If we fail the 382, then that's the rejection, right? Which you guys can see here. We have rejection multiple times failing 382s. Right? So just know if we can't even get above 382, then we're not going anywhere. right? If we go above 382, that means we have reason to get back up to 0, which is your high, right? Which lines up if we do get the Monday, Tuesday, Wednesday sweep the high, same thing again. Then now, again, like I said, we can now use deviation back down, calculate what has deviated outside of the value, and we can now push it back down, right? Back down. And then again, going back down, your minus 2.5 to minus 2 to 2.5 lines perfectly back down to the GP as well, as you guys can see. We fail here. We're coming right back, like I said. And also, again, where was this? What's this level? That's your value. That's your POC plus the value area low. So it all points right back down here if we fail here. Every measurement calculation possible. Your fib retracement, your deviation, your value, right? Everything is pointing the finger that way if we fail there. You guys see how I'm thinking? So I'm not just guessing that we finna have to go there if we fail there, right? I have the objective data of value, 3-month value, right? Plus the calculation from what has deviated once it has deviated, plus the low to the high of the data point that we will get that we can use the retracement off of. So again, those are all objective things, not nothing I'm guessing, oh, that's an order block, we have to go there. Oh, that's the gap, we have to go there. No. If there is a gap there, then good. If there is an order block there, then okay, even better. If there's a previous lick retest there, oh, even stronger. Right? Like best example, like I just said, right? Previous lick retest. How many previous lick retests do you see here? Like you see your fat previous lick retest right here, right? Look how clean that previous lick retest is. But again, what is that previous lick retest? Line with perfectly. Your GP. Right? Again, what is that line perfectly? Again, with your value. So everything is stored here, your most important things of this whole range within all the given data. And then again, after we get this, whatever this liquidation that we get, then we will have the liquidation outside that deviates outside of the value that we can calculate back down. You guys see what I'm trying to say now? Then again, once you calculate that back down, you have the clear calculation pointing finger right back to the POC, to the value area low, to the GP plus the minus 1.5 to 2. Yo, Steam, what's good?
What up?
What's good? What's good? You want to throw anything on? Cause you the fib master too. That's why I wanted Steam to pitch in something and give y'all a
I think
little
it's important. I
sauce.
think it's important to pay attention to like the laws of Fibonacci as well. Like look at the
Exactly.
sequence. And like you know,
Go
you have
ahead
your
and go ahead
382,
and
you
tell
have your
them.
618, and you have your 886, and it's really useful to use the extensions to look for your trend, like your extensions of the trend because. Like Elliott wave, I'm not an Elliott wave trader, but fibs really line very well with Elliott wave. Like almost every Elliott wave trader is
Exactly.
also
See,
trades
that's what I was
fibs.
telling everybody earlier.
Yeah, yeah, and it's because the sequence has to reset. Like we can't just displace forever. We have to reset and rebalance. We have to rebalance the chart. We have to rebalance
Exactly.
the
See,
range.
and Steam will tell you guys the same thing.
But like one of the things with the fibs though is I think that I personally don't. I won't just take trades off of like a raw raw fib because you need
Exactly.
something to line with it. Like and 90% of the time you'll see that the fibs that do hold like your higher lows off of GP or off the 886 or off the 382, you're going to have confluence there. Like you might have a previous
Value
low resting
gap.
above a fair value gap, and then that fair value gap lines right with your 618 to 0.65, right? That's where you can have enough confluence, like, okay, but let's start to look at this. And then you line that with time. I was actually literally just on a live doing like a full breakdown of one of those exactly. Um, it's really accurate. I kind of made like a model for fib time and fib
Yeah, that's
price,
what I'm saying, bro.
but
That's
it's just there's no point in really using that. It's just overcomplicating. Like it's nice to use, but it just also overcomplicates just regular like Jay's timing with like 4 6 hour candles and regular fractalization. But like with the fibs, the extensions and like having like a set risk model for the extensions, I think is the most important. Like when you're trading, the higher low off the GP, like yes, I know it's awesome. Like I really only like to try to catch the bottom and have really high risk to reward trades. Like
Mhm.
anything over, 1 to 5 is ideal, I would say. But like when you're trading fibs, like your setup should be stop loss at the swing low or the swing high, and full take profit at the 1618 if it's a GP move.
Yep.
And that's your full take profit, and then I'll take profit along the way with my extension levels. For example, like rather than moving my stop loss to break even with structure, I move my stop loss to break even when we take the 0.382 extension.
Yeah, with
However,
the
your
fibs.
entries are going to be, not that your entries are going to be inconsistent, because that's already a bad thing, but you want to keep something constant. You don't want to have a variable that's going to be changing dependent on where you're entering and how you're entering, because some moves on the GP are going to go to the 705 and some
Yep.
of them are going to stop right perfectly at the 618. I don't want to have to worry about getting hit break even or stopped out early because I just set my stop loss to the low of that swing low, when realistically it still could go lower and that could just be the lower low and then we swing. That's kind of where you get messed up with it. So when you're trading off fibs, like you do have to keep in mind that like if you're trading a higher time frame fib, you're going to definitely have a wider stop loss. So you have to account for that, or
Yeah,
else
that's
you're
what
literally just playing with probability.
that's why, bro,
Like
all
that's
my, swing setups is on a 10x because you have to account for that. You get what I'm trying to say? There has to be a
Yeah, well,
little.
because even if the GP even if the GP fails, like that doesn't mean that the higher low is going to fail. Like really, when
Exactly.
you break down fibs and go to like the bare bones of it, all you're doing is trying to gauge a higher low or a lower high. And with that lower high or higher low, like as long as we don't take the high or we don't take the low, like and you get stopped out before it, like that's wrong. That's just a bad, it's bad risk management there. You're not properly, lining anything with your setup. But
Yep.
when you can use it in a way where you can be dynamic and have things that are staying the same, like for example, when I take something off the GP, when it hits my 382 extension, I move my stop loss up to the 705 on the retracement just to keep things simple. If the 705 on the retracement is lining with, really closely to a swing low, I'll just toss it right at the swing low. But then I'll just take 10% there so that basically I can risk a bit more drawdown. I can risk a bit more drawdown for a potential, a deep pullback on another higher low to, slingshot us up because it happens all the time. Same thing with the 886. I think the 886 is a really nice fib to use for the deep pullbacks. Uh, and I think honestly, in a market like this, the 886, like when we're chopping like this in a range, the 886 honestly can be a bit more accurate than the 618. But you can take two trades. You can always DCA. You can like that's what I'll do. I'll take it at the 618, and if it's not perfectly reversing right off the 618, then I'll just DCA again right at the 886, and then set my full take profit now to the 1414 extension. And that's, I mean, honestly, I think extensions are equally as important as the retracement is, because they 90% of the time they're going to line perfectly with previous structure.
Yeah, facts, bro. That's what I'm saying, bro. So that's the clean ways to really understand the
Yeah.
fibos.
But also though, I won't ever take a trade off of solely the GP. I have to have confluence.
Exactly. It has
I
to
don't
give me
always need to
some
have the confluence from like a singular daily, a singular daily breakdown on the third six. Like I don't, it doesn't have to be perfectly on the third six, but like
it
it,
just
it has to line with time. Like you have to line up with the sequence of, a weekly
time
candlestick or a daily
and
candlestick.
order flow. Time and order
Exactly.
flow. Yeah. Just
Yeah.
value or, absorption, new imbalances, gap, something to do with order flow has to line with time while you guys use the phase. Same thing with the deviation. Like I said, guys, you guys have to use it with the value, not just any highs and lows and just pulling the fucking deviation everywhere. Right? You'll get cooked.
Oh yeah, for sure.
For sure, for sure. Oh, my alert hit on river. Woo! Yo, that's just it, bro. It's coming to the level. My alert just took that low, bro. It's coming to my next level here, bro. It's coming to my next alert. Peter, we have to get ready, man. It's starting to hit my alerts.
They should
My
rename River Peter
my
Coin, dude.
my
Peter
my,
loves that
my
shit.
alert from here got triggered, brother. It took that low plus the gap, bro. And it's not stopping. Oh, I mean, it didn't doing a little suction here. Oh shit. Hold on, guys. Oh, wait, hold on. Hey, bro, that should really trigger right off of my alert and look at that suction. Oh, that was the fucking play, low key, bro. Hold on. Hey, Peter, what are you thinking, bro? You eyeing a snack on River soon or what? Because like I said, it came back all the way. I showed you last time we set the level. It just took this low. So it took the quarter one low, bro. Fuck. That is the quarter one low alert. I need to name these alerts so I don't forget what the alert is. That's the Q1 low. Gang. This just might be that historical play here. That's that Q1 low taken out. No gap down. If it absorbs this level, guys, this is just gonna scam back up again hard. Mega hard. And look at this, bro. That's clear. That's such a clear move. Oh my goodness. Look at that balance range before this deviation. And we just precisely took the quarter one low. So again, we didn't just take any low, guys. This is a time-based low. Q1 low. Okay, so setups are brewing, guys. Pay attention to River coming up in the days. If we start to see the daily start to gap up, I'm gonna start to look for mega. I'm gonna start to size in. But daily starts to have to gap up after this liquidation, so you can't just rush into it. So
Look at the
now
dominance move.
yeah, now I'm gonna be watching, how we can develop a swing point here. And if we do develop a swing point here, once again, that will be our deviation, guys. So then we can calculate our liquidation and our deviation. You guys can see the target going back up, right? And again, what lines first visibly this high? Where does that line move? Perfectly. Starting right with the 2, right? So if this works out, that would be your minimum target right there. Plus the gap too. So again, it lines with the gap plus a high, just like what Steen says. It has to line with something. It can't just be the level. It has to physically line with previous order flow and the highs or whatever. Right? So long as we can absorb here, this will be the mega play on River. Going back up, going a little high here. And again, just that move up, that's all you need to catch, realistically, to make a fat ass play out of this. That's 171% just to that high. Right? Just to the -1 deviation, it's what? It's 100%. Just to the -1. That's like damn near guaranteed target. Right? That's just one deviation away from this liquidation, which is just that's baby targets. That's half, not even half the Q1 range. Yeah, that's what I'm saying. Also, it's at the value area low of the entire range too. So this is lining with the value. Again, this deviation is with the value, right? And again, major time is here. So long as we can swing off of this, I'll be looking to size in into River for a low leverage swing. So this will be a good setup to watch, guys, in coming days.
Wait, is ill here?
Yeah.
Yeah.
Hey, yo, ill.
Oh,
You there?
nah, it literally has nothing to do. It has nothing to do with crypto. It happens. It's about that blue gem AK I picked up in Counter Strike. That
Oh,
shit's insane. It's like a 400. It's like that shit's worth like 400K.
damn.
Fucking skin in the game. Those
For
those two
real?
blue stickers on it. Yeah, those two blue stickers on it. There's one listed for sale right now at 146K.
You gonna sell that bitch?
No, it's not mine. I fucking wish it was mine. No, I picked it up in a game. I
Oh,
can't believe it. I looked up and it's for sale.
oh, you picked it up? And it was,
Yeah,
oh
I
my
can't keep
God,
it. I
bro
can't
was
keep
literally
it, but I
holding
picked it up.
bro was holding a game fucking 120 racks on a fucking game gun, like shaking his hand, like, what the fuck?
Dude, yeah, I would imagine. I would imagine like one of those Titan Hollow stickers are listed for 146K. So you got two of them. That's like 300. The skin alone is probably worth like 60ish, bro. That shit's like mega. Like I was tweaking when I picked that shit up. I had to take pictures instantly.
bro. But yeah, guys, like these things are cooking, man. I want to see the. Hey, what do you think on the weekly fractal? Stink. We're going into the week 3 Wednesday, third six. You think we'll scam the high and take a fat short, or what?
Mm, yeah, I mean, I was looking at the same
I
thing.
mean, what's
Like,
your
I was
plan?
looking at ETH though. I was looking at ETH
Either
yesterday.
way, ETH or Bitcoin, it's the same thing. But like, I mean, you see my
Fucking,
ETH
I
plan.
deleted. I deleted all of it.
Look at my ETH
Deleted
plan; it's still there. So long as it's the same. ETH looks worse. Bitcoin looks stronger. ETH failing the GP.
it. So here, hold on. Wait, can I share my screen? I don't know if I can share my screen.
Yeah, you can share your screen.
Like, look, this is what I like. This is what I was looking at. Like,
All right,
already we
bet.
failed off 86. We didn't perfectly tap it, but we're just about there. Failed off of it. So like either A, I would like to measure out this range, right? We figure it out. We popped above the value area high there, but I was more so taking this lower time frame setup, not this full move right here, because I still do want to see if there's a potential. If we scam this high, we'll definitely scam this up here too. But like if we fail off, like bro, we have previous link here, gapping down on the six. This was where I was paying attention to though, is if we gapped up on the 90 from last night, which we didn't. We didn't gap up. I guess this morning. I think maybe I'm thinking of Bitcoin, but look, no gap up. Right, we're filling this net gap on the 90 right here. This is also GP at the top end of this. It's probably at GP right now, right there. So if we fell off of this with the previous lick too, as well as like uh, value where can be a little bit shifted from the overnight price action, yeah, it came down a bit just because of all of this. But previously, it was a bit higher here. Like, I guess not. Maybe I'm tweaking. But I was looking for this to see if we would fail off of this, so I'm still kind of watching that. Just because, like, bro, it was either we lost this last night, but instead we did the higher low, held value area low. Like, and if we look on this, like for what we had today for the long, like, look, this was literally if we hop on like the 15, it was super clean on the 15, right? Like, just banked literally right off of it, no gap down, higher low here. I mean, you could literally pull this out to GP as well if you wanted to, right? Rip our extension. So I'm kind of watching it already fully reset and then, did a whole other sequence in here. But if it fails here, I'll think about a short, but it's kind of, I mean, I'll look for it fourth six, honestly, if anything, because we're kind of getting a bit of an inversion here. But like if we fail even up here at previous lick, I'll probably look for the short just as well as like if we look at like the weekly. This is what's most important to me is if we can hold this micro gap up on the weekly. Like if we fail here, like especially if we push that little bit higher, like two previous licks, sweep it and fail, like that's GP of previous weekly candle wick. And so I would look for like a micro little short, maybe just even
Yeah,
open or something. Yeah,
yeah.
but like low key, I was thinking it would look better by now, but
That's
it
what
I
I'm
mean, it has
saying.
like we're still holding this here.
Yeah,
But the
but
second, like if we were gonna get this last night, get the suction past here, I was gonna start looking around these areas potentially for longs for like the mega weekly boost up to take this high or something. But we're kind of failing it. So like if we fail this and don't end up doing a higher low and we failed right off previous lick and we're not gapping up and we're failing like literally again this gap up here where we kind of had our first shift right here. I mean it aligns with the wick of the or the GP of the wick from the previous weekly. So was kind of having bearish bias going into this, so I didn't even take. It's also Monday, so I didn't take long anyways, because I was more so looking for this move here. Now that I think about it, I should have just definitely taken the long, but maybe a little bit. But this is what I was looking for was the short off of it, and I mean it's not gapping up on the 90 anyways. But I think it's just too close now to fourth to what's it called? The end of the day. So I'm just I don't know. I kind of want to wait and see what we have tomorrow. Because if tomorrow we get like a little open high and we get the div right here, then I'll take it. Because then that's Wednesday, that's the high, and then
that's
that's what
clean.
I was thinking.
Yeah, I
I
mean
mean
that's pretty much,
that's
and
what I
it's just week 3. It's the monthly fractal now.
that's
So
I mean yeah. Plus
this,
look at this here too. Like look at the month. Look at the monthly candle.
you turned off your stream, no?
Oh
Yeah.
yeah. Like look at the monthly candle here. It's not an aggressive, like it's not a super aggressive blasting candle. I hate that we didn't take this though. I really wanted to see this get
Yeah.
taken. But what's kind of nice though for like the whole Q2 open high thesis is that even if this candle dumps back a little bit and does the pullback, on week 3, and we kind of reverse this, we'll still have this target up there left. Because like, look at this
Yeah,
though.
exactly. That's what I'm saying. We'll at least rebalance, some of it and take the Q1 high, no? Or at least halfway.
Yeah, well, because like here,
I think we at least take Q1 high if we scam.
because like, look, this was all taken. This still kind of down here
That's
kind
the
of remains
Q1
still
low.
taken,
Yeah,
but this
that's
was
what I'm
taken.
worried about. That's
You
just what
know,
I'm worried about, the Q1 low, man.
then we took this, we put in this high, but now look, we've got it still. We haven't taken
We're
this high
just
yet, and if we're gonna
we're
take this
just
high, we
we're just
almost
still
have to go and take this.
we're just still stuck in the balance, We need to really like displace that, value area from that swing low to that high. No, from
If
that high. From the high to the low. Yeah, from that high. Yeah, yeah. See, we're exactly right on it. You see, we're stuck on it,
yeah,
bro. Coming right. And if you pay attention to that last peak scheme, that was exactly Wednesday on the third six, going into Tuesday, Wednesday. Look, that was the week 3. Yep, same. We're about to do the same thing again. You see
mhm.
that? So if we peak up again and
Except
then
this
fail
time the
that shit,
setup's a bit cleaner.
yeah, then I'm bringing it back into the value, bro. If we fail again, I'm smacking it right
And
back
then that's
into
the same thing I was talking about, like
30 R
assumption for
short again.
last night. Like,
Bro,
if
that
we were to
short I
not
took was
hold this
30
higher
R,
low
bro.
here,
That short I took on
yeah,
these
yeah,
last time
the
was
shit was
30 R.
nice.
I'm doing it again.
Because like, if we don't hold this higher low here, like realistically, we're probably gonna end up coming back a bit
Yeah, and
further
that's like a half-ass equal low
to be
too,
honest,
bro.
because we've already
It's a
like,
half, yeah,
we
it's a half-ass equal low
yeah,
too,
we
bro.
don't
I don't
really
like
have
that.
much like, we have structure, but like we
There's
don't
no
really have
flow. Yeah,
much
there's no
bullish
flow.
structure to pull back into from here. So like, the first place we can realistically look for a bounce would be at these lows, but realistically, I don't know. Like, if we don't gap down past into the back into the value area of like the current Q1 range, then current Q1 to Q2 range, like this bottom range down here, not like the mega range like out here, but this one, then realistically, like, we'll have to kind of play the range again.
That's what I'm saying,
But
bro, and
even but
smack it
even
back.
still, then like by that point, if we have week 4, then week 4 is just going to be, probably bullshitting around in the value area at that point. And then what? And then then will next month open, and it's just going to be what, into POC. If we lose the POC, then we're coming all the way back down, and we got to restart again. So, and then we run the risk of gapping back down. But I still believe in the Q2 open high though. Like, I still do think that Q2 will
I think we're gonna
will
get a
have to
scam, bro.
blast.
I think we're gonna
I
get a
don't know.
scam, bro.
My thing though is that I don't know how aggressive it is. Like, I was
No,
thinking it was
this
going to
this
be
is where
much
we
more
can kind of,
aggressive.
start measuring, measure the deviation or the extension to the upside and see how
Like
far
this.
we could deviate to the upside. Like I said, Steve, objectively, time base wise, right? Think about it. What's the Q1 high, bro?
Oh yeah, yeah. Hold on. I'll have to actually do the day.
Yeah, what's the Q1 high? Mark the Q1 high, mark the Q1 low, so we can have like the
Oh,
full
the
higher
Q1
time frame
high.
context. Like go to the daily so we can like have a bigger context. Yeah, but you can
One
mark that.
high open is going to be like,
Yeah, and then your open's like right there. Yep. And then your Q1 low, and then mark the Q1 middle point, 50%. Halfway mark, just pull the fib. Yep.
I don't have 50%.
Boom, right there. See, but you can see. But genuinely, those are gonna be our targets to target. You get what I'm trying to say? Why if we do
Hmm.
blast back up, And then our max target will be the Q1 high.
Well, and then here, look at this, and that's why I like this as well, because if we were to come up and do this,
Yep.
that's, I mean, actually, that's fucking horrible.
That's nasty, bro. Don't show me that,
But
bro.
it's
Take that
possible.
away,
Well,
bro. Yeah, it's
this was
definitely
more
possible.
so. This was what I liked, because now look at this.
Fuck. The
One four
move
one four
down will be
here.
so nasty, bro. It's
The
right.
1414 here, and ideally, this is where I want
Yo, guys, close your eyes, guys. Close your eyes.
this here.
Close your eyes, guys. You guys don't want to see this.
This is like
Close your
final stop
eyes.
before we really start getting shit on in this next
Oh,
move.
bro,
This
that's
is
the lick,
final stop here. But
bro.
like this, I don't. We can take the loan, we can
Hey,
bounce and do the same bullshit we've been
856,
doing.
bro. How long I've been telling you 856? Mark
Well,
out
that's why I like this
exactly
one four.
856, bro. Mark out exactly 856. We're coming minimum there. That's why I've been saying 856 for like 2 years now, right? And look,
Well,
look
and
where
now
the
look at
856 is. It lines right with the 141. That's just
if we were
we're
to come back
cooked,
up
bro.
here and
Yeah,
fail. But
if
at the
we
same
fail
time,
that,
though, what
it's
would be nice is, I mean, we could leave this. Like, we could leave this for the bull market. I could totally see a scenario where we leave this for the bull market. But realistically, if we take this, then we got this. Then this is like basically the last thing we have on any high time frame. Which I honestly would prefer that over. something like this. Even if we go on the monthly, the 23, like there's nothing left. Like this
That's
is
what
it.
I'm saying, bro. This is it,
So
bro.
if we can rebalance this whole thing, right? As well as like if you want to look from like legitimate mega pivot point here, look, that's why I like this area.
Yeah, it
Mega
looks
pivot
healthy.
point. Think like I bet if you use the box and the fan, it would probably be same thing right there.
Mm-hmm.
But that's what I like. And another thing I could see happening is like right at 856, we could do this same shit again. We could do this exact same formation bullshit here, where it's like, we come down, do our mega lick, pop back up, and
Fuck.
then we do this, and then come back and fail it, and then like
Boom.
down by
And
these
then
levels,
mega.
that's where I want to see it come in at, and then we can do like lower high. This is where everyone's gonna get fucked too. I guarantee you, this is where everyone will get fucked because it will be a lower high here, and then it pulls back, and then it's the same shit that happened here. The exact same shit that happened. That's my plan for the
Yeah,
area.
that's what I'm saying. If we get that mega extension to the quarter four, that's what I was trying to tell people, bro. We're gonna have that scan back up,
Because this is like
and then
max
quarter
fear
three.
just got cooked because well actually wait, this is not what I'm not looking for this. That part's off, but like this after that. Because I mean, bro, like if we get the inversion here, like that's gonna make if we get this and like make a higher low, like that shit's not gonna make any sense. Like, it would make sense if we like failed it or something and then came down and blasted, but I just don't see a scenario where like this high gets put in Q3. Maybe we could sweep the high, like we could sweep the high in Q3, but I don't think it would be insane to me if we put in the high at Q3 because of how aggressive this was this yearly open. Like it was literally only like it literally opened high. There was not a low.
That's what I'm saying, bro. It literally opened high. It like quiet, literally right on clock. Open high. We took those little scam longs and then boom, took those mega shorts. Should have just held it a little longer, honestly. And then we came back to the balance range. And every time we've been going up and down, we've been just longing, shorting, longing, shorting, longing, shorting, longing, shorting. And then here we are now after 3 months.
And like,
So
but this as well for when we come down to like the 856 level, this makes sense. Like if we can lick above it, like if we look above it, like to right like here-ish, like to like 900,
I had my
everyone's just
bid
gonna
there
be it's
on
gonna be max
Coinbase for like
pain.
2 years.
Yeah, it's
I
gonna be
don't know if
max
I will
pain,
ever
max
get
fear.
filled, but
Everyone's gonna be tweaking out. Then it'll be a fat
I'll
lick,
get
and then
filled
everyone's like,
though.
oh, we're so back, and then
I'll
we'll
get
range,
filled.
and then everyone will start figuring it out here, and they'll be like, oh, we're gonna blast, and then
And then boom.
it's gonna come
Then
lower, and it's gonna wreck everybody, and then all
and
those
then
same
I'll,
people that did
yep.
that here, they're
They're
going to go
out.
back, and then they're gonna take shorts here, and
Small
they're gonna
pullback,
print a little bit, and
previous
then
week retest.
they're gonna get
Boom. Yep.
blasted there,
It's cooked.
and that's like the playbook that I see happening, and then it's gonna go back to from this point. Once it starts to come back, they're gonna be like, "Oh, crypto is a scam. It's over," and then that's how we know that higher low is coming.
Boom. And then fucking 7,000 ETH or what?
Yeah. Actually, wait. We can actually hold on. Wait. We can
That's
do
what
the
I'm saying, bro.
calculation.
It's the next target is 7,000 if we make a low.
As well as what's it called? That's another reason why I'm liking the 600 level because look at my 886 here. Right, so 886. I've already run through all of this. But so look at my 886 here, and then look at this. We come down to it. Look at my 1414. Look where it's at.
That's what I'm saying, bro. This is what I was just bro, look at that shit.
We have this, and
See?
then if you want to do
7K.
this too, if we were to come back. I don't know exact time, but like if we were to go, like we could say this happens in probably not 2027.
They're like,
But
no. It will be like if that happens, like that'll be late, like November. Like if
yeah,
that's the
that's kind of
case.
what I'm thinking. That's kind of what I'm thinking here.
So
But
if you
then
line
look at
that
this,
up,
right? So 1618. I gotta draw this up here. 1618, and then this one. Oh wait, hold up. That's way too fucking far. Well, I'm way off. This is 2030, 2 years after having.
that's what I'm saying.
That's it makes sense. But that's not where we're really aiming for. We're more so aiming for here. But that's like literally 2 years after having because having's 28.
In
So
April.
it would be like in this range.
That's actually crazy works.
That's what I'm looking for, like fib based. But obviously, this will all change based dependent on when we come and take this. But
Exactly.
we will come and take it though. It's like literally look, it's the last
Eventually. But
stop
look
on
at that. Look at that
the
trend line lick
23.
too, bro. Look at that trend line lick. Like that's all just fat ass trend line lick too, bro. That looks crazy. Probably better to do it on a line chart.
Yeah, it will be for sure. I also have my. I'm not a big trend line guy, but even still,
Yeah, just trend line
that's where
lick.
it fails, right? And then it's gonna. I mean, it's
Yeah,
failing GP
exactly,
already.
exactly. It's
Close
pointing the
below
same
it.
thing. If we really crack that, then that's how we really know, bro. If we close below that shit, it's over,
And
and
now
it's closing
something that's
below the
actually funny,
GP.
like with what we were just going over, was even if we do bounce and we do our move up to exactly where we thought, right? Say we do this and then we do this and then we come back and we were talking kind of about how it would look when we go down and try
Exactly.
to
Yeah,
take,
yeah, I think
this
either way
level.
we come in there. One way or another, we're going to
You
go
know,
take that low
we leave
over
that
this time.
protected, that we leave that, and we chop, and then it's the fake out comes right back up to here, and then it's the same shit we were just talking about. The bank, bank, and then bank, and then bank.
Mink,
That's what it'll be.
that'll be some. I'll be
That'll be the
I'll be
low. I'm
in that
telling you,
shit.
that's gonna be the low. I think.
Oh, well, that'll be the
Kind of thinking.
generational play for sure. That'll be if you're not focused and locked in then and shaked out of the market by
That's the
then,
money
guys,
game play.
then you're not
I'm
making
taking it
no
on
money. Like
100x.
I'm taking a mortgage out and
Look at that
just
shit.
fucking.
That's bro.
But
That's the
I'm
1000x
fucking
play right
yeah.
there.
That's
That's the
bro.
1000x
That's
play. That's the I'm
bro.
gonna
It's just
do
one
literally.
trade. That's what I'm saying. And people would think, oh, that's a joke, but we can actually catch. Bro, I caught the whole. Bro, I done it multiple times catching 6 month swings. Like it's doable. You just need to really know what to look for, which we know what to look for. You know what I mean? So I mean, these type of plays, guys, is what me and Steen like specialize in. We're not like day traders. You know what I'm saying? So we like to make these higher time frame plans that aligns with time and value and these fib levels. And this is how we always been, taking our swing trades. You know what I'm saying? Your higher time frame swing trades.
And this trade literally like 6K on 50x or something like that. Even
Yeah,
just
so
with
like
the
something
margin
realistic, like
left
not even, bro,
when
you
you
could
know
even
this.
bang it on the 30x, and just fucking put like, 5 bands on it and bro, take it to that high. God.
I'll be honest, I'm a low key be doing a lot of 100x at this point. That's where it's time to take the
Sheesh.
risk. I think low key, just in my, I don't know.
Yeah,
I
bro, you
personally
could know that.
wouldn't
That's
do
what I'm
it. I
saying.
wouldn't
You could
recommend
do
it.
any leverage that suits you at that. For me, it would be 10 to 20x, preferably, right? You know what I'm saying? Since it would be a mega swing,
Yeah.
and then just
So
size in 5 to
this is
10K.
yeah. That's the
You know,
3K position size. I'll keep the rest of it as margin for drawdown if needed
that's what
because I
I'm
think this
saying.
will probably be
Exactly.
relatively close to the bottom. But also, I do have to be careful because when it's low like that, the moves are much fucking bigger. So that's like another thing you have to
Oh
think
yeah,
about.
bro, it's gonna be fucking big ass. Bro, if it's that cheap, little move is gonna be like 20%, even on ETH.
But this is the 3K
Yeah,
this is the
pull it.
3K
Pull.
margin to
No,
3
no, no.
mil
I'm
trade.
saying just pull a little bit up and see how much how volatile it will be at those lows. Just pull a little bit from the low and see how much it will be up. See, look how like just a little more. That's too tiny. But like I mean, even that's one candle is 7%. Oh, I mean that's volatile zone, bro. See, look, that's a tiny ass move up and it's 30%. That's
And we bring it back
See,
up.
exactly. That same move here is gonna you see? That same move here is only worth, 8%. Down there, that's just 20% move, 30% move. This is exactly what I'm saying. Down there, the same move is gonna be 20, 30% going up and down. We'll make so much more money down there, bruh. Oh,
This is the generational play.
exactly. That's how we all just can retire the whole generation long as we study and focus and lock in till that day comes. Cause I ain't missing that shit, bro.
Like if I could do honestly, that's one of the plays I think where I would go and like rip like if I could try to rip like big fat like as much size as but like that's like where I'm taking loans out to
Well,
take
yeah,
10x.
I mean, realistically, if you really want to do size, guys, then this is where you take this approach. You take 100 bands, 3x. Boom. You run a sling of 300 position size and just fucking catch 10x. Whoa, you're making 3 million, bro. Holy
Yeah.
fuck. Bro, that would be it.
What if you did 100 bands on 100x though?
Bro, but
See, now we're talking.
I mean,
Making
then
making
yo,
100 million,
then
100
you're
mil.
making fucking 300 million, brother. You're talking a whole different story, bro. I'm talking about a little 3x leverage, but if you want to be like, 100 band, 100x type shit, but I just feel like, bro, imagine doing that.
I would
No,
never
no, no,
do it. I
imagine
would never
doing
do
that
it.
and then getting stopped out and then it runs, Like, I'll be so mad, bro. I'll just not trade it after that. That's what I'm saying. You know
But
what I'm saying?
imagine doing that and then
But
it
like,
does run.
if you do 3x though, you're gonna be able to survive a little, drawdown here and there, even with large size. You're gonna be cool. You're gonna be like, oh, bro, I have fucking, 30%, 40% room to the downside before I get yapped out, then that's just even on ISO, So
But this is I think pretty optimal to look for. This is like exactly what I'm thinking. High time frame. I don't think there's any way that this survives like a higher low here. I don't see it possible.
the day that it melts through that higher, the higher low right there, that's big ass crazy, crazy
The only
place.
way I'll believe in a higher low is if we're